Folks, the markets, well, they plunged again today. And we're going to take a deep look at exactly what happened and whether or not to run for the hills. But first, time is running out. My 14-day breakout code page, it expires tomorrow. And there's something in there that I absolutely need to share with you. It's my plunge-proof asset that protects us in dips like today. As a matter of fact, we actually are up double digits on a hedge as we speak. Click the button below this now to see what it is. Folks, the market's down about 450 points or so on the Dow Jones right now. We're going to be closing in about 45 minutes to an hour. Doesn't look like we're going to see too much more downside or upside. Looks like we're in the middle of a trading range. Here's the good, the bad, and the ugly. The reason the market's falling down is we're showing data that economy is slowing down. There's no question about it. Economy is showing signs. Manufacturing, there are some cracks. Now the question is it a micro thing or is it going to continue? And the problem is the trade war. So we have that. We have the impeachment. There's a lot of friction, and the question is the economy going to spruce back up or is it going to continue falling? Well, here's the thing. Right now, we breached the 50-day moving average. This is the 50-day moving average. And the market right now is right in between the 50-day moving average and the 200-day moving average. The RSI, this is a really powerful indicator because it's not sensitive. It's right near the 30. It's beginning to become oversold. And it looks like it's going to become oversold right as we move back down here to the lower end of this range. So it looks to me like we're going to hover right in between the 200-day and the 50-day moving average till we see some positive data. Now, let's talk about positive data. We have employment data. We have jobless claims coming in tomorrow. Here's what you can expect. If the new claims is below, if it's really positive meaning if the number comes out between 200 and 210,000, that's a solid number. The market will probably rally. If the number comes out above 219 or 220,000, anything above 215,000 claims, it's not going to be pretty for the market. We may see some more downside, but I don't expect us to go too far below the 200-day moving average. I think this is a good support level. On the S&P, it's about 280, 250. On the Dow Jones, which is even closer to the 200-day moving average. I don't know why I can't get my words out today. That's the 50-day moving average. That's the 200-day moving average. And as you could see here on the Dow, we penetrated the 200-day just a few times, just a little bit, and then we bounced back. So don't be surprised if we see a little penetration taking the Dow down to about 25,775. I'm extrapolating. I'm looking at the at the diamond. We switched between the spider and the diamond. And it looks to me like it's going to fluctuate right in between, kind of bounce around. The type of trading action we saw right here, which happened to be between August 5th and August 28th. Don't expect to see a deviation from that. Expect to see a trading range in between. Everything is kind of known right now, and we're looking for a catalyst. Earnings don't really begin for another 2 weeks, week and a half with bank stocks. That may be a tiebreaker, but expect the market to be range bound. Don't expect a big downslide. Everything's known already. The possible slowdown, it's known. Interest rates are near historic lows. Look at the bond market here. The bond market's taking off the 50-day moving average, and volatility, as you can see here, let me show you the short-term volatility. This is 30-day volatility. It's just now at 20, and it looks like it's peaking out. It looks like it hit the high and is closing near the lows, and it looks like it's going to go down to the average. Anytime volatility gets above 20, it puts market in fear mode. We're dropping over 400 points on the Dow, and we're barely above 20. So this is not a big deal. It's a very minor correction. Expect stocks to trade higher over the next few days. Maybe a little bit lower tomorrow morning, and then more upside. Talk to you guys soon. That's all for my rundown today. But there's one more trade I want you to look at. Click the button below to see my recent broadcasts where I gave out a premium trade alert at no cost, no catch, nothing. But this alert is timely, and you have less than 24 hours before it expires. Hit the button below to get the details.